Is Berkshire Hathaway a buy or a sell? First off, read this disclaimer carefully. And do your good deed of the day by liking and subscribing. The megatrends, they are showing their very interesting facet in that, they are massively outperforming the S&P 500 from the lows, and notwithstanding that they are in a very deep bear market. So it goes to show you how the big moves definitively come from low levels. The theme for this video is under the other themes, and I call it famous investors. So 15% here from the low and minus 11% pullback. So these characters, they are doing, pretty well. We do see that, Berkshire Hathaway, it is, especially like managed by Warren Buffett, one of the most famous investors of all time. He is the best performing from the 52-week low. He is beating the Rothschilds, Icahn, Bill Ackman, and Kevin O'Leary, and is also beating them in terms of the 52-week highs. So Berkshire is basically at the highs. So here we have the chart, weekly data points, and we can go pretty darn far back. So there is a certain pattern that has had a tendency to repeat itself. So let me just draw that one in. It's a kind of a cycle pattern where you usually have a broad cycle, a smaller cycle, and then a big cycle before the pullback. Then you do have, a bit of a broader cycle. Then you have the following cycle, and then you have the one that is resolved through a more substantial pullback here as well. And you could argue that we have something a bit similar-ish happening now, but it was, disrupted by this whole COVID thing. So the cycles are a bit messed up. But I think the key thing to just be aware about Berkshire Hathaway is that after protracted periods of being in an uptrend, it does have a tendency to have more substantial pullbacks. When we look at the latest price action, it's been performing really, really well. It's very, very strong. So obviously the bulls are in control. The thing is that when we look at some of the other indicators, you will see that historically this has not been the worst time to consider some bearish opportunities for Berkshire. Okay, invalid symbol. So let's get Berkshire. So I am considering just changing my antivirus because it is so aggressive. It almost basically wants to just shut me off from the internet entirely. I guess that's the best way to prevent viruses, but a bit too aggressive. So here are the daily data points. If you look here at the most recent candlesticks, like here and here, well, basically quite a few of them, there is some sign of exhaustion, especially the last 3 here. It seems like the bulls are struggling to get higher. When we go here to the weekly data points and look at these other indicators, so in terms of the MACD as an example, the current reading we do have on the MACD is extremely high. It is very rare. If you look here at the RSI, we are also elevated, but we are not in like extreme territory. Looking at the distance from the purple 20-week moving average to an extent the 50-week, but especially here the blue 100-week and the red 200-week moving averages, you see that when we go back here to 1998, it is very rare for us to have even higher readings on these very long-term moving averages. And these super long-term moving averages, they of course show us the distance between price and the major bull uptrend from a more historical perspective. So if you look at previous times where we had these extreme readings on these super long-term moving averages, that is here. So this time you can see here to the left, here also to the right, you see that the cursor tool is mirrored across. Yeah, so that resulted in a pullback, but that was a smaller pullback. when we go a bit further back and find the other time where we had these very high readings, that is back here in 2018. That's when we were very high on the 100 and 200 week moving average PPO. Same reading that we have now. The difference is that in that time we also had very extreme RSI, so that is the thing that is different this time. And then if we go further back and you have this period where we have, these very high readings on these long-term PPOs. And the PPOs, they measure the difference between price and, these moving averages. The blue 100 week and the red 200 week moving average. So in this instance here in 2014, we did actually see that it marked a key high, and we had a very substantial pullback here of 17%. When we go here to the daily data points, and let's just go back to our current time frame here. We have higher readings. We have been higher, but we are certainly in the upper quartile of instances. The accumulation distribution is still bullish though. So there are a mixed package here of bullish and also some bearish signals, but I do think that the 200 and 100 WMA PPO overbought. Those were the key indicators. So yes, definitively very, very stretched, and the previous times where we had these readings, we did see that it marked highs for Berkshire Hathaway. So in terms of the technicals here, I do lean a bit bearish. The problem is that the previous times where we had these major highs on Berkshire, we were a bit higher across some of the shorter term PPOs and also the RSI. So even though we are elevated on those indicators as well now, we are not as far as we were back then. So let me give this one, I think I will give it a -3. Let's now look at seasonality for Berkshire Hathaway. So to the right here, we see the average price-wise over the last 5 years. So let's just see what usually happens. So over the last 5 years, there is a tendency for seasonality to be a bit weak here heading towards early April. But generally speaking, it's a bit mediocre really. It doesn't really get bullish until after June. Well, early June, that is when you see that major uprise in seasonality. Same thing here over the last 7 years. We usually see a weak period heading towards later April. And over the last 10 years, we usually are weak towards later April. And here as well, you do get that much more consistent, strong seasonality from late May towards late July. To the left here, over the last 5 years, you see that March is a weak month, April is very strong. The problem is that May and June are very weak. They are the weakest month for Berkshire Hathaway. Over the last 10 years, March is 50-50, a mediocre month. April is strong, but May and June are weak. And then the last 20 years, then it becomes very clear, and now we have a lot of data. It is very clear, and this is of course real data, real seasonality. This is the facts. From February towards June, the seasonality is very weak for Berkshire Hathaway. On the other hand, from June towards November, the seasonality is very strong. And this is over the last 20 years, very big picture. The bullish thing here with the seasonality was April. So that is a bit of a caveat in terms of what could sabotage a bearish thesis. But the seasonality was, however, overall bearish though. That's the thing. So the coming months have a strong tendency to favor the bears. So I think I will give this a -5 here for the bears, with the caveat that April does have this strongish component, but right after April we usually see weakness. So it could be that April is a month where we usually see a bounce in Berkshire Hathaway. Next is the fundamentals. Here is Saks.com. They have a number 3 hold on Berkshire. Style score C value, D growth, C momentum, industry rank top 31%, categorized as insurance, property, and casualty. Yeah, I guess it's sort of correct. Berkshire does have a lot of exposure to insurance, but I do think that there's something very unique about Berkshire Hathaway as a stock. It's more, I think it's more correct to call it like a conglomerate. Okay, so no dividend here. Market cap is huge, 720 billion US dollars. That also means that for Berkshire to go up, the price, it needs to generate a lot of new business. So a small cap, they can sign a new contract and go up like, 100%. But Berkshire, they need huge inflow of new business to move up, let's say 100%. A lot of new business. So that is the key difference between small caps and huge caps, is that they need the bigger the market cap, the more spectacular the news has to be for it to move the stock, in both directions. Okay, so here is what the insiders are doing. Last move here was accumulation. It seems like Abel Gregory is the only guy making moves. So yeah, but he was feeling a bit. So these are all the same dates. So we need to look at. It seems like the shares accumulated versus the shares sold is pretty even. So here are the consensus estimates for Berkshire Hathaway. We only have 3 analysts covering this stock, which is really low. The average target is 6% above, highest is approaching 12% above, and the lowest is 1.7% below. I went also to Finviz to sort of get more data, but the latest price targets are from 2017. So that's it's a bit odd. So let's see if maybe the A shares have more price targets. No. So maybe people are too afraid to give any price targets for Warren Buffett. I mean, it's strange though. It's very strange to have this huge giga market cap stock have this few analysts giving price targets. Yeah, that's okay. Whatever. That's ridiculous, frankly. But yeah. Okay, so in terms of the fundamentals here, so Saks was a bit of kind of lukewarm on Berkshire. The analyst price targets, they are basically too afraid to give any kind of takes. So it's a bit difficult actually to make a call here in terms of the fundamentals. The stock, it does not pay a dividend. That's a big minus for me. And we also see that we don't have any recent price targets. That complicates things. And then, so we basically have to rely a bit on Saks. Yeah, let me give it a 1 then. So slightly bullish, but just a 1. Then we have relative performance. Okay, so we see that there's a 93% correlation with the S&P 500, 96% with the Xlf, which is the financial services ETF. Well, I think it's the financials ETF is the correct name for it. Then you have 88% with Kia. So this is the insurance ETF. So yeah, the correlations are in. There's a lower correlation with the insurance ETF. And then you have 28% correlation with the US 10-year yield. Daily data points. Minus 3% with the S&P 500, 36% now with XLF, but then we jump up to 43% with the insurance ETF, and then 80% with the 10-year yield. But looking both long and short term, the strongest correlation here is with the XLF. So what happens to the XLF will have the biggest impact on Berkshire Hathaway. Okay, so let's do a quick technical analysis of Xlf. So yeah, this is one of those ETFs that people were like super bullish on, it's going to the moon, but we do see that there's a rounding top pattern. The thing about a rounding top pattern is that you can see that it forms through this rise, decline, rise, decline, rise, decline, rise, decline. It is of course possible that we are going to have a rise, but a rounding top pattern formed on the weekly data points. So this is very big picture. they have a lot of gravity. So sure, from a purely technical standpoint, we could get a bounce here in the financials, but given the rounding top, it's highly likely that it will resolve to the downside. So let's say that we get a rally and maybe we meet resistance at the 200-day moving average. That could be the time where we move down again. So here we are looking at Berkshire Hathaway against the XLF, the financials ETF. You saw that there was a period here where Berkshire was like monstrously outperforming the broader financials ETFs. After that, after peaking here in early 2009, which was the low of the big bear market, we did see that Berkshire has more or less moved sideways. The interesting thing here, though, is that if we do get a monster bear market in America, there is a very real possibility that Berkshire Hathaway again will outperform the XLF. Here we have the dot-com bubble, and you do see that he outperformed the broader financials there as well. So it certainly seems like Berkshire is like a flight to safety. So that's a very interesting thing to keep our eye on, though. So yeah, that's definitively bullish. Let's look at the seasonality here. Okay, so looking at the seasonality for the coming, extending all the way here towards mid-June, Berkshire has a strong tendency to underperform the XLF. Okay. Then we will look at the relationship between the XLF and the S&P 500. Okay, not that. Let's do it like this. Okay, and we go to weekly data points like that. So we do see that XLF. So it obviously during the global financial crisis, it completely collapsed, underperformed against the S&P 500. It's basically been languishing sideways. Really has. So yeah, it's sort of like it's still actually quite weak. So that's interesting. Looking here at the daily data points and seasonality. So it seems like the coming seasonality here is very up and down, up and down, up and down, up and down. So very, very jagged. It's basically just sideways. Sideways tug and pull. In terms of relative performance, we did see that Berkshire has a very strong tendency in both previous bear markets, the dot-com bubble and also the global financial crisis, to massively outperform the broader XLF, the financial ETF. That is very bullish, but that is like in the event of a full-blown bear market, yes, Berkshire is going to perform very well. But in terms of regular seasonality, we do see that Berkshire tends to not do well in the coming months. That is relevant, of course. So I do think I will give this one, what should I give it? I think I will give it the -2. So I'm actually being a bit generous here, and that is simply because we are in this time of war now. So this is the kind of situation that could be interpreted as really good potentially for Berkshire, where they can make all kinds of massive acquisitions and just eat up other financials. So anyway, to sum up the score here, so we do end up with the -2.3, which means that the data is more bearish than bullish, more supportive of bearish theses than bullish. A key part of the bearish thesis would be the line in the sand. That is like the signal event, and that is that the 200 and 100 week moving average PPOs are very overbought, and we do have additional data here that corroborates a more bearish thesis. Whatever you do, of course, you want to use stops and be market neutral.